Well, contrary to sell in May and go away, should we be doing the opposite this summer? Are we set for a hot stock summer rally? I don't know. What do you say, Brian Sozzi?
Yeah, well, it's more like what does Bank of America analyst or strategist Steven Suttmeyer say? He went back and crunched the data for the S&P 500, its performance going back to 1929, so a lot of historical performance there. And he's noting in the first year of a president, the summer tends to be pretty good for the S&P 500 and the markets overall. The average returns for May during this period, first year of a president, up 1.9%. You can see that on the chart there. June up about 0.5%. And July is the best month, up close to 3%. So historically, that 3-month stretch is the best 3-month stretch out of a year, again, with the caveat of this as being the first year of a presidency. Now, having said that, what tends to not be good is the fall during the first year of a presidency. Stocks have fallen about 57% of the time in August in the first year of a presidency. That decline has been about a 2.43% decline. So not a big correction per se, but not exactly a great month for investors. Now, in September, the decline on average has been 1.38% in September. And then declines in that month have happened 44% of the time. Stocks tend to recover into year end based on BofA's data, but not a whole heck of a bunch. But I do want to mention, so overall, my take here is this. Anyone view watching this and trying to trade some of this data, remember that market history most often doesn't repeat itself. You never know what investors and traders were thinking about in 1929. Surely I am not aware of what they were thinking because I was not born yet. Number two, but if history does repeat itself, as I mentioned, look for a fall sell-off. Certainly there's a lot of concerns about the Biden infrastructure plan. And if that is in fact passed, does that come, Julie, with those tax increases you and I have been talking about? Also, too, keep in mind, but while the buy the dip crowd remains entrenched in Wall Street, this crowd's stomach is going to be tested likely in the second half of this year as we see companies report earnings growth slowdowns or decelerations. A lot of companies are going up against very strong year-over-year comparisons. We just talked to Zoom. They will be up. They will be one of those companies going up against strong year-over-year comparisons. So a lot to be tested here in the fall and the back half of the year, Julie.
I look forward to it. Brian Sozzi, thanks so much.